Okay, so I had this guy email me, and he claims that he is trading with Albert Brooks, which I know I've seen about 3 Albert Brooks videos, and I agree with Albert Brooks actually, because he says anticipate the next move. Albert Brooks is pretty aggressive because he was a surgeon at one point, so for him, trading's a lot easier than surgery, a lot less risky. You know, nobody's going to sue you for malpractice. So he was able to make more money trading than doing surgeries, so he said, I'm just going to stay home. Trade. I just made more money today trading than I do surgery. And of course, if you got the balls to cut somebody open, you may have the balls to trade Forex. Or whatever he's trading. I think he might have been trading ES Mini, which this guy is trading. Now, I can understand the old 1 tick above, 1 tick below entry because it's kind of a clean break in a 4 decimal system. Like if you put a buy stop on corn, you're probably not going to get picked up on a fraction of that like you would in a 5 decimal broker. I don't think a lot of people realize how difficult it is to trade a 5 decimal broker if you're looking at the tick chart, because it distorts the movement. I mean, it's a wonderful movement, but it's 10 times the resolution. So you're seeing, it's like having a room of 10 girls instead of one big fat girl. It's way more to take in. So it's way more, there's more, different things there. So you can't buy a 10K without repeating your price in a 1 pip zone. I think maybe 11 pips top to bottom. So Albert Brooks is saying put 1 tick above, 1 tick below. Now this is what we all learned is a shallow confirmation, I'd call it. What else can you call it? And I guess you're saying if it goes up 2 pips, we're going up. If it goes down 2 pips, we're going down. Or I wouldn't put the trade on, as Mark Douglas says. Why would you put a trade on that you didn't think was going to work out? Well, you kind of have to do a lot of things you don't think are going to work out, like going back to the 1 big girl and 10 hot small girls. It's harder because there's more to pick from. And you'd be like, I don't know, it's kind of down to like 3 girls. Now, having choices is a huge problem because the whole reason people are using indicators is to smooth out the noise and make the decision crystal clear and just a switch, on-off switch. Going up or going down. I do think that the pip matters though. When the volatility gets below 30 pips for 4 hours on a certain currency pair with a spread that is a percentage of that movement. So if you're in a 30 pip market and the spread's 3, okay, not so bad, right? If you can keep that number 10 to 1 or better. So in a swing trading, you're running 50 pip stops to make 300 pips. It doesn't matter if the spread's 10 pips on the currency pair. But I'm not going to look at a fucking 30-minute chart on the guppy. I lose my mind. I couldn't trade that many. I couldn't do it. But if you want to trade 10 pairs and you can be that guy, like I said, I can't cheat on my girlfriend. So I pick a currency and I go with it. I'd rather have her come home with a wig or something, or garters, or have her change it up. And the market will change it up because Asia is very quiet. There's a certain kind of Wednesday, you'll see new highs and new lows. You're halfway through the week. This is the big gushing move. This is the breakout. There's only 6 bars a day on a 4-hour chart. You got to build a hedge plan. You got to build a limit plan. You got to build a market plan. You got to have all 3 going. Now, you don't have to do all 3. I'm just saying to give yourself the best chance, and this is always the reference is being profitable, but you can be very profitable for 2 weeks and lose everything in 1 week because of the size problems. It's not that it's not a good song you wrote. You just spent too much on the recording time. In other words, you got lost in the mix, and you can't, until you leave the room and come back, you can't tell how much reverb you put on the mix because you start to live in the next level of reverb, or the next level of indicator, or the next kind of dream trade. But the sad thing about it is the trade that's about to happen is in an area that is a hot spot. Okay, so when the guy says avoid hot spots, Well, not if you know how to trade the hot spot. The old support and resistance goes on, and I watched this guy called the Chapman's Way, talking about stop hunting and claiming that 7%, it's been known that some auditor out of Switzerland says 7% of the market's retail, but then, of course, he takes into account that there are some losing professional traders out there, God forsakes. You could be making $1 million a week and losing $500,000 every 3 days. And you're like, okay, well, I mean, I'm up overall. Yeah, I got carried away on that trade, but, I knew my risk. So knowing the risk going in, give yourself a healthy 200 pip stop on a 1K and just live with that ticket. And this is where you have to address what you find uncomfortable about being underwater, even 50 cents. Because you're fucking wrong. Already you're wrong by 5 pips. How wrong do you want to be? And then people say, well, don't add to a loser. And they say, well, because you have to have strategy. In other words, I won't say strategy, you have to have tactic to get in and out of the market when the market's going sideways, and accept getting stopped out with an 8, 12, 16, 28, 32, 48 stops. So yeah, on the tablet I wrote scripts that I only wrote on the tablet, which is a real bitch because of the keyboard factor. But I muddled through, and then I imported them into the desktop, and I was going to build arrays that were very fine-tuned, a half a pip apart. Now I'm going to double the tickets for when I'm looking at the market thinking, yeah, they're probably going to rip that down for an hour and a half. I'll put 4-hour orders in that are 40 pips deep. Now this is 10 pips this is a pip a minute rate of change. Your 15-minute scripts are 15 pips deep, right? Your 30 minutes are 30 pips deep, on and on. But if you're going to go for 10 pips an hour, which was what I was going for, which is a pretty good clip, that's 240 pips a day, right? 10 pips, I'm thinking, okay, it's a 4-hour order, it's 40 pips deep. Across the board, all currencies. This is where you're going to have to trade more than one currency pair because you wrote a hard trade plan that for the next 4 hours, I'll buy dropping it right in this moment in time. So you're actually entering at the market with a predetermined locked order. It's X distance away. It's got to stop. It's got to take profit. Now you read about 10 of those that enter about 5 pips apart. And you can cover an area, or you write one script that does that whole array, but you can't just keep pressing that button because now you're going to stack up too many orders in a hotspot, and the hotspot is going to blow up the account, or it's going to stop out the whole script, and maybe you'll run out of money before you even hit your stops. But in a 5-decimal system, yeah, you can buy every half pip for the next 15 minutes. They're all 1Ks. The next thing you know, you're in a 20K. I mean, this is the trade. Are you going to drop that every 15? This is why you want a robot. Are you going to show up every 15 minutes and really drop that? Now, I'm running the robot. It drops every 15 minutes. How long does the ticket last? For 1 hour? Now you're stacking up a overlay of at least 1 hour. You've got all those orders working, but every 15 minutes, one of them drops off unless it fills. And is there 5K in that button press? Now, here's where it really matters whether you built a car that's the size of your coffee table or it's the size of one of those that are only allowed in the work site. This is what you're dealing with in these markets. If you're getting into some insane, go watch Hilton Trades Forex. This guy's coming in with like 400 standard lots, or I don't even know, 1,000 standard lots. And he's in the market, initial drawdown, packs out of fucking whatever. And he's down like 1,700 when he pulls the trigger. I'm like, I don't know, man. That's pure spread. I don't think there's commissions on that because the spread's so god-awful. But I think he's trading in Asia or something. There's no way this guy's trading the news. You blow the account up in a second. Even though he was at $350,000. So I'm not up for that because I could just place orders that last 3 days, last all week at the beginning on Sunday night. You want to swing trade it? It's not going to make a difference whether you've got a Gartley. You're going to have to buy it lower than it is now to make any money. Any, what people would call smart money. Putting the orders in before the item goes on sale and just putting it in there, even if it's manual. And you're going to take a risk of the whole account. So I'm trading with 4Ks right now manually because 4K, I figure, is about 25% of my, if I can go from 1K to 4K, I've got these 25% increases in how big it's getting. So it's like first gear. First gear is a lot of torque. You're not getting anywhere. These are the scalps you'd need, right? You'd have to say, okay, I'm just going to get in because of this wackadoodle. You just set those up in advance because there's going to be drama at the highs and lows. Always. We know this. We just have to have a trade plan for it, which is to place orders right there at the scary place because you don't know what's going to happen. And if it does go into the trap and then comes flying out of the trap, out of this window of fresh price, then we're going to have to maybe unload half when we get to halfway between, or as we're coming off that floor. And this is where, if you're trading one currency pair, size really matters because you're just going flat to slightly into, okay, now, and you can just trade one direction, even though you are taking advantage of the bear's entry. If you're buying, because you have to get out where they're getting in. And if you can't see where they're going to get in, then, it's going to be many levels, but they will be clustered in wherever we see a new high, an old high. Just looking back on the Williams fractal. So if you put Williams fractal, should give you an indication where you want to, that's going to point out that turning window. So 5 bars gives you a fractal, a pointy fractal, although Williams is actually getting in there on the breakout of maybe 3 of those get taken out or just one gets taken out. I mean, he's literally going to go like Turtle Trader. He's not going to try to do a scalp and do a market maker. That's supposedly means limits, a limit entry, and just chop that wick and ride it back to the other side and dump it, or go the other way. Some people are waiting for that break out of that triple top. Now, there's a guy that's selling the first touch into that window, back again, You can watch it on the 5-minute. You don't have to trade every zigzag. But if you've gotten in on the 15, based on the 1 hour or 4 hour, you can see the shelves that we're going to fall into. And that if nobody comes in to buy that and it starts to flag out and goes into a congestion mode or a consolidation mode, it's going to move hard out of there to make up for the lost time too. It's not just a price vacuum, it's a time vacuum because your chart's ticking away in front of you. This is why you never want to run a tick bar. You're missing the whole fucking lie detector factor of it. It's marching at you in a linear sample so you can see the fact it's slowing down and speeding up. Once you put a Renko on it and build bricks, you gotta babysit this thing, which this guy's doing in this video, by the way, which is insane for me. I can't imagine. That'd be like, well, we did a movie, but we're going to play it back to you jerky. Oh, that's, we'll take out all the jerks and we'll just make it a nice smooth movie. Like everybody's moving the same rate everywhere they go. It'll make no sense. It's telling a story. The market has a path. Obviously, it's going up or down, or it's going right to left, or it's going north to south, however you want to describe it, right? I never heard of this Pat guy, but he sounds really like very strict rule guy. Not that there's anything wrong with that, but Still, I haven't heard him. I only got about 3 minutes and I never heard him call out a trade. So it's going to be that one tick confirmation entry. Oh, he is going to talk eventually. Apparently he doesn't want to read this part. So here's his explanations. The red are good short trades following our rules. Oh, well, see, this is where I totally come unwrapped with this rule thing. No, I'm sorry, the red should just be good sells. Just show me where to sell. The blues are good for long trades following our rules. So we got rules and regulations here. Just want to tell you. Have a seat. Okay, fill out the application. Yes, that's right. Are you a heckler? Are you going to have we got a problem with you? Green arrows. Green arrows are good setups that are very aggressive. Oof, I think I like this green. And I will normally explain why. But in most cases, they're not for new or inexperienced price action traders. I just don't know. I mean, is this like the new Scientology? We have to have this bizarre explanation. The lavender circles are interesting areas on the chart. Oh, I'd like those, please. But not necessarily a trade would we take. Oh, I would. Show me the land of this is the gay trader's guide to trading. The lavender circles. That's where I get in. I've been making a lot of money on there. The FX guide to gay traders. Boy, he spends a long time on this window. Come on, buddy. Oh, here. Oof, wait. Hey, shit, wait. I just missed a critical piece of information. The arrows always point to the signal bar. We enter on a stop. Order once. Now, this is the old saw. We've heard this one. How to interpret arrows. Where's it pointing up? We supposed to get in? The arrows always point to the signal bar. Well, that's good. Makes it easier that way. And we enter once. So basically, whether it's a pin bar, I'm thinking he's not picking the small bars. Something tells me. And the old one tick below, depending on entry direction. I like this, a safety stop. Always goes one tick above, one tick below signal bar. So you're going to get trapped. That's the bad part of the strategy. And you can let this stuff stack up, but I would say let's limit this entry technique for God's fucking sake without regard to any trend. Let's find the small bars for this strategy, please. We don't want to be getting in after the market's already stampeded north and you're going to start buying, I guess, right? I mean, if you're scalping out of some of that, any entry, if you're getting out of something along the way, is a good entry. Come on. But I don't know. This is also the Albert Brooks approach. I mean, this is conservative stuff, you know. I get that people want to fly the plane without crashing it. And Bill Williams is a pilot, right? So, I don't know. Yeah. In the end, you know, are you going to feel comfortable with your own? So this guy says, after studying this guy Mac with his tick bars, he realized that it's very hard to be profitable using his entries because you need almost a 75 to 90% success rate to scalp profitably with his entries. Yeah, I think so. I mean, he could be getting chopped. I don't know what time frame he's getting in on. So let's take a look. See what this guy's up to. Oh, shit, he won't talk. Okay, here we go.
Hey, it's Mac with Price Action.
No, I like Mac already because he's one of us folks. He's a good trader. I think he's using a tick bar. Mac's from down south. 2,000 ticks in the ES Mini or the ES. Now I'm just going to say right off the bat here that his entries are not bad. He's getting in on this hammer. Here he's getting in on, it looks like he's picking the pullback But I don't know where his order is. I think this is the problem is if he was getting in at that arrow, I'd say fucking beautiful. But I think he's placing a buy stop just above here and so he's waiting for a small bar. Here's a hammer. So he's putting a buy stop at the top of the hammer. Now another thing you got to realize though, you're going to babysit this thing. There is no way other than this one structure that just pops out at you where this bottom becomes a top. Okay, without regard to the moving average and its channels and all that nonsense, that this structurally, just a horizontal view, is a really big deal, this price. And as you see the stop hunt, you're selling here, right? Here they come. Oof. They're pulling it back. You're getting them retail traders. Those guys are trading that breakout there. Got them by the short hairs. And once again, a little pip, one more pip tick higher. And this is the confirmation, guys. Now, he looks like he's putting his confirmation ticket on the top of that bar. I would say, since he's running a tick bar, if you could have a robot place buy stops here and just do a cancel, and when you see it, in other words, when the market dies down, you have a stop bot stacking up buy stops. Okay. Here, not really, right? There's only one stack. Only one stack. You really have to be here to nail this. But what if you determine this moving average says we're in an uptrend? Just start running buy limits. Just run a pack of buy limits and capture that whole wick. In fact, have enough money in the account that you bought right here at this lonely wick. And you just put a big fucking order bank in here and you just don't care. And then later on it comes up here and you're like, I think I'm getting out. Yeah, I think the sellers are going to come in here. I'm done. Or you got out here at this floor and you go, yeah, I think I'm done. You know, if you bought here, okay, and you just said, I like this price. Oh, I like it so much, I'm going to do that same trade again and again, right? Here, no breakout. So the confirmation people that put a buy stop here on the whatever time frame, here's your bottom become a top, right? Here's your pivot. As soon as this comes up here, I'll be cashing out. Yeah, they're going to probably trap it here for a little bit. Oh, it could just keep going. We can see here's a lonely wick. Comes down, crushes to here. They're like, oh, fuck yeah, right? The big boys got orders here because they could see this low. They got brains. They could see, I mean, what are people missing here? I know nobody wants to be underwater when they buy here, all the way to here, and they really don't even make it back to where they would do the first scalp. And they're like, holy shit. But yeah, don't forget you have orders here, right? Because you could perceive this. In fact, all these holes left behind are where you're going to buy. All the holes on the north side is where you're going to sell. You don't need to know anything else. You just have to trust and believe. Put a sell limit up here. Sell, 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 sell. At some point, that market is going to back off in some zigzag manner within that. Did you layer in so you have martingale in, so you have bigger cells up here? Baby cells, baby, then really big, then really big, then really big. Okay, and maybe it's linear risk. Like you've got a 1K, a 4K, an 8K. If you just kept adding 4Ks, so you had 4, you start off with a 4K. You get 8, 12, 16. That's quite a bit of toolage as far as size. Surely you could find a couple places to plant a ticket here. And I don't know how many pips would have to be because this is like maybe ES Mini or something. But all markets are the same. Look at this lovely little trap here. And somebody grabbed that little dead cat bouncer. And then once it started to fall to this hole, I'm buying here. But here I'm buying really heavy. And when it gets to here, I'm just buying so heavy, it's mind-boggling. But I don't have to be there for it. I mean, certainly when I bought here, I really hoped that I would have taken that off the table. But if I don't, then I'm going to end up getting in more here. So if you plan the whole day ahead into these zones, right? Same on the sell side. If you know you want to be a seller starting here, you sell real heavy. Maybe it's sell tickets here that never filled, like you were actually hoping for a raid on this area and a comeback. Only talking about 2 price pulses. They come into my sell limits. It comes back, I cash out. I don't know anything else. As far as the 50% of the position to pad the account, in other words, if I put buy limits starting here all the way to here, I got enough money in case it comes down here. It eventually comes down there. And this is underwater all the way until here. And this is why you see a big reaction here, because anybody that loaded up here, or it's a revolving door. So all the people that, bought here, once it gets to here, their books are balanced and they get out. But there's still one more wick. You can't hardly see it on here to kind of hunt down. And you get a double top there. It's pretty subtle. This is 2000. Don't forget, this is all smoothed out, idealistic data here we're looking at. We don't know how long this took in time. I mean, time's just all distorted on this, right? It's a 2000 tick chart. Maybe I'm wrong. Anyways, the structure horizontally holds true, except the consolidations are kind of less dramatized. We don't see a perfect punctuation, so pointing an arrow at that means 2,000 ticks have gone by. Then we put our ticket in. Have we missed the entry? I don't know.
TradingSystem.com. And it's Wednesday. It is April 24th. This will be our chart lesson for today. And I'm going to turn my ringer off on my phone real quick so we don't get 100 interruptions. That's the way it usually goes. So, but anyway, range day today. You can see the overnight highs and the overnight lows. And, when you're halfway through the trading morning, you're still trading inside that. And prices are swinging back and forth above and below the EMA. Generally, that's what you're going to see as a range type day. We did have some pretty good move trends. We had a good trend down, good trend up, and another good trend down.
Wow. You'd have to jump on that trend. I mean, you literally have to assume that this is a shoulder here. Right, so that's how you have to play it. You see this big move, you go, okay. Not to mention, you knew there was sellers here pulling that back into this window. Without regard to his, he doesn't have a current channel drawn, so you can see he doesn't, this is all hindsight drawing, so to speak. He should have a channel here right now, right? Like this. Yeah, we're going like this now, see? Or you could just go like this is your rate of change, right? How much money do you want to make? And I put a T-bone in there like this. Now, on this chart, we have to assume that this is a shoulder when we see this. And either we're going to wait for this shoulder or we're just going to sell the head. How to sell the head? You put a sell limit at the shoulder. I mean, I didn't think it was this stupid easy to trade, actually. So nobody's going to like what I have to say. We assume this is a shoulder. We assume this is the head. We're going to chop off the head with buy limits. Just going to do it. We never get... the shoulder here sucks. It's too low. We're going to sell the head. Just like here. If you think that this is a new low compared to this, you're going to buy into that. We don't know how far that's going to go down, so here's a trick. Look real far left to find the next void that you can look back into, because that's going to matter. And then when it comes to here, you can cash out of everything and go flat on the very top order. So if you have the trade plan that you can afford to buy all the way down into that, and then some, and then we come flying back, and maybe you get out of a lot of the position by here, and the rest drifts, and you're like, okay, now that's a completely different outcome than, say, let's buy really hard, and when we get down to here, we're getting in like martingale. So now we're getting in serious. Like by here, we're in so big that we cash out into here early, and we've made almost 100% of our money. And here it's just kind of like we're drifting with 50% of the position. For another move into here is our long range target, and we get it, and then it overshoots a little bit. So it's about assuming that this is the head, because you have to first assume this is the shoulder. This is the head because this shoulder here is too late to get in, even though confirmation from moving average, and it's not a bad trade. It's just as good as any of the trades he has on here. I mean, he should have an arrow here, right? Because if all he did was buy new lows, he'd be like, oh yeah, that makes sense. So once you see the auction, the horizontal view, you just can't unsee it. We always assume that this is a shoulder and this is going to be a head, and we're going to sell that back to the shoulder, right? This is how you trade a head and shoulders. Sell limit here. It comes down, and you scalp to the shoulder. I mean, that's not the best trade, but it's a high probability win that it's going to come back to the breakout point. This is the old, it breaks out, say it breaks this, right? It comes back, screaming back, and finally it gets back, but doesn't make it to the bottom, become a top. So as you look out here, which is, again, distorted 2,000 pips per bar, I mean, having a hammer show up on here is amazing. Most of the bars on here are going to be just so... Okay, here's your first dip in the window. See the dead cat bounce. Right here, it makes new low, and then it comes ripping back, and the scalpers get out, right? Long-term guys are like, oh yeah, come on, give me some more of that, right? Give me some more of that. Here, start buying here. If you really got balls, you start buying here. And that eventually becomes a nice winner. But if you didn't get out and your stop is here, so here's where the problem is. Obviously, if you bought here with a stop here, it's a problem. Also, if you bought here and you only bought one ticket and you put a stop here and you're like, holy shit, I didn't get out. And they came back and they smacked me, and this is my 50% window. Oh boy. We can see all the problems in just this moment here, but if I saw this chart right now, I'd be like, well, it looks like I missed my buy. You have to admit you've missed the trades. This is why you do look back on the chart. Hindsight's, it's not that it's 2020, it's that it's a brutal realization that you missed a great trade. Holy shit, I could have just sold here in this little mini vac and would sell them. Yeah, I know. Trailing sell limits, you know, that's a trick by those market manipulators. But look at that thing. And then this vac's getting all stressed out. And then look at the apex of that thing, ripped down. And of course, a lot of people are cashing out into this. They know they're getting in the buyer's window, and this is the ultimate stop pump. If you believe, I mean, I'm talking about how people refer to it to try to describe a good entry. Same thing here, right at this top. Man, it's just a little bit higher. So Albert Brooks thinks that that's very advanced. I don't think so. It's like saying, well, you shouldn't drive a manual transmission. Oh, no, you should be, so you can understand what the automatic transmission's up against as far as the way you drive. So what else? And of course, let's not get into the fact that you could buy this if it pulled back here. Just because it's down, you're buying. Here you would have to take some punishment. If your first buy is here, buy, but you're getting in, guaranteed. You're getting in every bear bar. Here's where you're really loading up on limits. This becomes a winner eventually. It becomes a very big winner. But the whole time this is dropping, I'm like, oh yeah, okay, that's great. I love it. It's like when the neighborhood goes to shit and you buy up the houses really cheap. It's like, there you go. Yeah, I'll take that. I like that.
And then another trend back up. So
I'm a trend trader, damn it.
The trends are big enough where there's a little bit of
room. I like a big trend. Come here. Hey, Mildred, he got a big trend.
Room there to, to find an entry.
And entries. I like entries. Entries, I mean, that was so good.
And it was pretty consistent off the top until late in the afternoon.
Consistent? I hope he didn't take those trades up there. He doesn't sound like the kind of guy that would.
And but it wasn't that consistent off the low, so it made it a little bit more difficult. You really had to wait on kind of a reversal pattern off the lows to really find a trade, because it just wasn't consistent turning spots off the lows. But there were quite a few trades early on this downtrend, so you would have had a good opportunity to make some money today, really before 10 o'clock. Most of your trades were before 10 o'clock.
See, I think you could have done this without having, I think he has an EA doing this or something, but you can see that just buying the trap, maybe you add a position here. Like I said, if I'm bullish, I'm buying every time it's down. So I'm going to build a position. If it's down, I buy. If it's down big, I buy. Right? Buy. Not buy so much because it doesn't really pulling back too much, but it is a good trend trade. Buy and buy. And of course, here's where you have to ask yourself, is your trailing sell stop guy coming in like this? Okay, once he comes up in here, he's going to get crushed, right? Because this is a very huge wedge of big vapor trail of like nobody's there. But bam, come back, fill. Backfill. Big down bars, buy more. So I would have bought here and here. Don't buy up bars. If you think this isn't a downtrend, you sell every up bar. You don't do it. This guy's just, it's ridiculous. Come on. Sell. Sell every up bar, and here's a doji breakout. You're getting filled on a sell, although if you don't move your stop, if you do trail your stop in those tickets, you got to follow the market. It's kind of sad. Here you got a buy limit sitting here. Here you just got filled on your sell and scalpers came in and they're scalping it to here right now. The question is, are they going to be able to take out this level, or are we just going to make it back to the middle of this? Now we're going to rip up. That is the hard part, is to accept all these little things happening. Not to mention this is still pressure here that has not filled, and as it climbs out of the hole, as soon as it trips the first wire here, their first pullback, they tug it off of this zone. See, that wick pulls it back off of here, and then here's the final fill. But we cannot stampede to this level. We cannot make it. Come into that window, and bam, gotta give some back. Come back to here's where you're like wave 4, so to speak. This would be Elliott wave. This would be I guess 1, 2, 3 is a big wave. 4, even though it doesn't look like a idealistic, and this is the 5th, right? If we climax into this window, we will assume that even this is a shoulder and this is a head, and we were right. So we were partially right on that. Good old-fashioned theory. Assuming that this is the shoulder. I'm sorry, this is the shoulder. This is the head. There was a little bit of a trade there. But relying on the volatility is another factor here. And if your sell bot is stacking up, right, and The more it drifts, the fatter it trades. The more the highs in a complete one period Bollinger Band, really. What I'm talking about is just bracketing off the highs. All that pressure's building up. As you crush into this window, right? It's invading this price. Look at the reaction on that. So yeah, I would scale into the. If I was trading the ES Mini, I would just put orders in like this. And like I said, this is a 4 decimal broker. I mean, this is a. You're not having the resolution problems like you're having in Forex. I mean, if this had just the look at this beautiful doji here, like these. Also, he should be getting in right here with a hedge every time he sees a gravestone, which means the market has gone nowhere right here. So. Also, we see the structure of these wicks becoming kind of the top of that wick. It's pretty precise. We do eventually make it back to this double bottom. But with these channels on here, what he's saying is we got a good downtrend, we got an uptrend. Yeah, I guess. And if you're waiting for a rule to pull this trigger on here, then you just don't understand what's going on here price-wise. These are mini auctions. These are mini vapor lock, liquidity. They might even be ICT breaker bars. I don't even know what those are, but I don't know what this is equivalent to. A half-hour chart, 2,000 ticks. Look at this clusterfuck structure. Wow. As this thing cuts up and it's just a big messy, it's just, you're really waiting for this moment of truth, and then a big back off into this. Now you're expecting, okay, it's down, we're buying. It's as simple as that. It's down, I'm buying. If I think we're going to fill this hole, I'm going to buy at the end of 2,000 ticks down, I'll just buy. And then I'll put some limits in here and I'll walk away. So once you get used to laying in, maybe risking 20% of your account, I don't know how much, but $1,000 in your account, $200 risk. You're not going to fill in all these tickets, but yeah, sure, I would trade the ES. It looks pretty easy. I mean, you don't have to worry about this 5th decimal shit. Look at how this wick is almost the same size, right? These wicks are the same size. It's very, maybe it's the 2,000 ticks, but this is not a lot of resolution, is it? Forex is a fucking mess. I mean, it's literally like a half a pip. This is only to the, right, there's 5 decimals in the, Forex is insane. So I guess that's why people are able to do depth of market, because there's only so many handles. Like I think it's corn's a quarter of a cent. So some stuff's like soybean oil is decimal. So this thing, yeah, he's got the classic stuff on here. I just don't think I could trade like this because it's too many rules. It really is too many rules. I've just got simple rules.
And then we only had 1 or 2 in the afternoon here, so you just kind of got slow in the afternoon. And there's 1 or 2 you might argue far up here.
Oh, I'd argue all night up there. The thing is that people say, why are you talking and making fun of these other people's trades? Because I'm just saying, like, can't we all just start to accept the fact that maybe this is a high? Maybe there's resistance up here. Maybe we should sell up here. I'm just saying. I don't know why it's so offensive to call out the Emperor's Claws. Oh, he did draw a channel on there. Okay, so he's banging up against the channel here. Or just scroll back. I can't read. But, you're selling there, but not everything you own, right? Because maybe you do have some trailing sell stops. So you have a little bit of confirmation in you. You're kind of normal. Then you have some market orders because you know better than anybody this is the only chance you're going to get. And the limit order is kind of the scariest order of all because it's a different kind of confirmation. It's not that it's like it's going against you. A confirmation doesn't sound like confirmation, right? So if it's in your favor, hands up, don't shoot. It's going your way, right? So it's okay.
They're not real clear. I think it's risky entering up
He is
here.
risky. Now, damn it, I told him he's going to get to that risk. Don't say risky. You're making me all uptight.
Here, you just don't really get a good short entry till here. So
See, now that you could have placed when the market was down here. And this is the hard part to accept. Also, the market's down here. You got to start putting that settlement up here because you would have got filled. And if you didn't get filled then, and you were late, even if the market came down there, you'd be like, I still like the sell up here. I still like it. And if you just put a settlement in there, man, ahead of time, you'd be like, yeah, just like I thought it would. In fact, this trend line kind of doesn't have anything to do with the highs or the lows. He kind of just threw his channel in there, and he seemed to nail it. Well, I think he's doing a 45-degree channel, and notice he's not doing that channel based on the current price. He's saying, okay, I like this miter box thing. It's a fork in the road, right? So he's doing his, which is good because now his target should be well below here, right? But I already got my limits in all the way down. I don't have to babysit this, right? I'm just going to buy limits and see what happens here. Maybe it doesn't come down far enough, and maybe I'm thinking, you know what? I'm going to have to start putting some goober buy stops in. We keep making lower highs on a bar by bar basis. Not talking about 20 bars of highs and lows. I'm talking about the most recent high is the current, vapor trail vacuum above us. And below, we're cutting in on this one. We're cutting into pockets that go way back. And I suspect we could just go ripping at a rate that's so fast that if you had to watch it drop into your limits, you might pull out some tickets thinking, oh, God, I can't believe. But that'll be the trade that kind of changes your mind about it. If you've got enough, these are scalps, and some are going to be swings. I would say I'd be out of most of the position when it came back to here because I know that is the last known low. And if it goes sideways during this term here, I could sell into it. And this is why you'd hedge, because what if you did sell into this window here on this up move and it doesn't really come back and start cutting into here? So you put on a hedge at this point, you put buy stops in, and maybe you were hoping for something like, some madness where it came all the way back to here, which has been known to do, right? Isn't that what this move's about? We fill this hole, we come here, and then we go back there, and people are like, holy shit. Right? This is why people's heads come on wrap trading, is compare this move, which is nice and just, what a nice, and here I'm just using my 4-period moving average. But you're like, holy shit, look at this thing go. And then bam, it just gave it all back. But really, it's coming after this, right? And then the scalpers take it to here. One more low. Bam. And now we've got such volatility, void by void. And it doesn't calm down until about here. And this is where it just melts down into that new low, right? So we can see this perfect trap here in price. Overshoots, actually, the scalpers are already out by here. But I think this is what it's about. I would print this chart out and just draw on it with your hand, and you can just kind of make up a 5-period moving average pretty quickly. We'll assume like this is a 3-period moving average, and just be like, okay. I prefer it that if you use the line chart, it'd be easier, but something like that. And then you notice this big void and this big void, I guess, as far as it takes up a lot of time on the chart. There's another void. So are we going to cut into this void? Looks like not. Not at the moment. And of course, right here, the trade plan is buy at the market as we put limits in beneath. For me, that's the obvious no-brainer trade. I don't want to have to think about all this ridiculousness and look at the moving average and draw channels and
anyway, let me back out a little more, and we'll talk about the trades. And
back out, would you?
Won't take long today, and we'll wrap the day up. We'll be.
Oh, I guess he's scrolling back.
Almost through the week. Tomorrow will be Thursday, and we'll wrap up our week. So, of quick week coming back when you have long holiday weekend. It tends to be that way. So anyway,
I hope the guy that wrote me doesn't have this. I'm just kidding. I don't know. I don't know this guy, Pat. He's not the one from Saturday Night Live that can't find the right bathroom, is it?
let's talk about the trades. 7 o'clock came right in this little push back up to test these highs right here. There's a nice little double test, and you could actually argue that is a failed second entry long. I didn't mark that one. That's a possibility. I'll go ahead and mark it green, and you could really argue for that to almost be red because
red, better red than dead, or better dead than red. Now I do see that it looks like it went 1 pip tick higher. Did it? Or is it right there at a double perfect top?
it's a double test, and it
Wait a second. Yeah, it's perfect.
is a failed second
If this was a Forex market, it would have poked through just a little bit. It's crazy.
entry long, so the signal bar is not as important. So that's a possibility, but if you just waited on a lower high, you had a better entry here, and it actually went higher and turned and went out the other side.
See, what I was hoping he was going to say is that the reason why that's a good entry is because notice the volatility died down enough to give you just this little baby bar with a doji. That's your signal. Put on a hedge or just go short. Also, see this window here breaks out, breaks this wick, and see here's the top shelf of that rooftop. Breaks that wick. Meanwhile, not a lower low. They're all higher lows. Boop, boop, boop. Big vacuum left behind, crushes down. Here comes the buy limit, guys. They pull it back up. Sell limit within 1 tick. So the 1 tick rule goes both ways. There is the 1 tick above confirmation entry because it's going up. You get trapped and raped, but if you only put your sell stops and your buy stops in the baby wicks, no fill in the wrong direction. So I get it. This is like trading corn. If I put a buy stop 1 tick above, you can't do that in Forex. I guess you can, but holy shit. This is why you go to the 4-hour chart in Forex. Because there's too many. You are just so close. I mean, you're like 3.5 pip. There's 5 levels. There's 10 levels in a 3.5 pip window on the 4-hour chart where you're talking about 18 hours of just getting right to the edge and come back. To the edge and come back. So, yeah, fake breakouts in a 5 decimal broker. You know, this is why people are like, yeah, trading yes. You know, every pip's worth a lot in this market, dude, because you cannot slice it that thin. Every tenth of a pip is a lot of money when you're in big. You're looking at the account going, Jesus Christ. I think I get it. And then you're like, no, stay in, man. This is a great trade. Okay, but I'm going to scalp out of some of this. It's just making me nervous. I mean, this is during quiet time when you can watch the fluctuation of the account, whether it's real or fake. If it's fake, then ask yourself, can you handle $2,000 of fluctuation every half hour? And if you're in more than one currency pair, how can you tell if you're actually making money? I always wonder, how am I doing? Because I can't, which trades make money? Now here's this perfect long entry. Look at this one. Buy stop here. This is the entry bar, right? So he gets filled. But I say, this is the better buy stop. We've got smaller bars. Let's take advantage of this. Even though they trapped that guy and they pulled it back, but at some point you gotta accept the fact. You just gotta buy somewhere. I don't know what the spread is here. Maybe there is no spread. Maybe that's why people are trading it. But even at that, yeah, if you got a buy limit sitting on the top of this wick, or you're willing to buy this vacuum, and you're accumulating, and after every down bar you buy, the bigger the bar down, the more you buy. So you buy a lot, buy a little, buy a lot. Right there, at the close of 2,000 pips. Why not 3,000 pips? Right? It's a completely different chart, isn't it? I mean, it's going to be where this is the down bar. Then we get a doji, which is always kind of bizarre on these charts. The doji, so gravestones. A lot of gravestones, too, when you don't have that super deep market of 5 decimals. Look at this beautiful dragonfly inverted, 2 dojis. Maybe you have a trailing buy stop. Just keep spitting them out. Buy stop. Okay, we're filled. It never puts a buy stop in on a big bar, though. Only little bars get buy stops. That's the filter. That's the trick. Only little bars get sell stops. Sell stop, sell stop. No sell stop. You don't want to get filled here, right? Because they're going to rape you. You just, if you missed the entry, you missed it. Here's a buy stop, baby bar, buy stop, buy stop. Baby bar sell stop does not fill. See, that's the beauty of true breakout trading. Breakout trading, to me, with the one tick entry on this chart, yeah, I'm taking these trades. Plus, I would just get in at the market with a super tight stop on a doji, and if it's down big, I have a wide stop. Big bars get wide stops. My checklist, I should draw it someday. It's like this. Let's say we're on the 1 hour chart. What did the market do in the last hour? If it barely went down, maybe I'm barely buying with a tight stop. What else can I do? If it's down big in 1 hour, and I'm looking to the structure of, the past kind of like path the market has left, I'm going to think, well, I'm already getting filled on limits. I guess I don't have to buy this because I was expecting something like this. I was expecting the end of the world, so I put my orders in on it. Be like, you know what? I'm good. Now I might say, no, I'm not good because I didn't put enough limits in. I don't feel like putting limits in. I'm just going to fucking buy here at the end of the hour. And I'll wait another hour and buy. I guess this is where it takes a little discipline, right? Because if it goes down 3 hours in a row and you're buying every hour, you're like, oh, God. Now you might want to buy every half hour because you're so excited about the trade and you can see that we've seen these situations before. Therefore, you're like, oh, this isn't just a retracement. This is a total engulf. It's a full tilt auction where we go down into new lows, then we go to new highs, and the whole thing's just crushed in both directions. For the guy that's getting in on the larger time frame breakout, he's being trapped. Or he's being stop hunted out of the trade that he was a perfectly good trade. It's so funny how people want to spin it for what they're doing. Why am I getting, are you getting stopped out? Or are you just, getting out where your target was and you wish you were in for a bigger win? Nobody wants to take, this guy's talking about it, a 75% win rate. You could be right 35% of the time, make a killing just because you've got super tight ratios. You're literally risking like 20 pips to make 1,000 pips. I'm sorry, like 20 pips to make 200 pips. 50 pips to make 2,000 pips. Stuff like that. Yeah, if you look at how far can the market move in 4 months, now you got orders all week long, so that's, let's just say for the month. Every week you got orders pending. And you just close the books, you open them up. You probably want to do that on demo because a lot of people aren't going to have the discipline not to look at it till 5 days go by. I could probably get somebody to do that that's never traded, but once you've watched the tick chart and traded even on a demo, you realize how much money you can make. You're probably not going to be able to resist seeing how your orders are doing. If you've very enthusiastic about trading. But if you are just somebody that you're hired to place orders for you, in areas that you point out to them, and then they come back and they've done all that stuff. And you look at it and you go, oh, that's, yeah. And that's the labor. It's placing the orders. You hand them whatever size pending, and they probably could out-trade you because you know too much about maybe the 15-minute chart, so you're probably going to go trade that. And if you were to look at the swing trades through the lens of a 15-minute chart, you'd be like, oh, I'm just getting the fuck out of this thing. You're not going to wait for the larger wave to unfold or the bigger auction to take place. There's many auctions, many VACs. There's unfair, there's many black swans, and there's giant black swans. So there's a fractal world, you know. We could put up a 10-tick chart here. Of course, probably the market wouldn't go anywhere. It'd be a bunch of zigzags. But yeah, I mean, this guy, the guy's trading with his view of the market. I don't know if I never heard of Pat, but this is Pat trades the market here.
Side.
I can't get over his accent, I guess.
I don't think I would have waited for that bar to complete and gone
I think you're right.
short down here. You'd have been safe, but it's just such a huge bar.
Safe. You know how safe I want to be. I ain't messing around with nobody else's wife. I'm going to play it safe.
It's just kind of risky. I mean, that bar has got...
Holy shit. She's got debt like... Have you seen her credit card balances?
You can see the range is... that's basically 8.
She's hit a few trees. Came home drunk.
2 point. That's a 2 point, so that's right at... It looks a whole lot bigger than that, but I guess maybe it's not.
It says 6 points, dude. It was reckless driving.
It's 8 ticks, but it really looks a lot bigger than that. I guess I backed out a little bit, so that's still a big bar.
Big bars, no stop entry there.
I don't think I'd have gone short at that double bottom. I'd have went short 1 tick below this bar when it turned back down, and if I did,
well. Too much analyzation there. Then he's got that channel drawn there, like he's got a channel within a channel. I've seen it now. So he's got to draw this one to correspond. We need to see this going on. Then we're going to see a channel within a channel. Oh my God.
If I did go short here, I'd let it break lower and I'd drop a limit order back up here, maybe a tick.
Oh, there you go.
Or so in where you might have entered on this bar, and you see it would have backed up and filled you and then turned down.
Beautiful.
But
wow, finally he gets. I can't believe the guy's calling out a trade there. Yeah, so definitely scalp one of these moves, throw a limit in, even throw a damn goober. Do all three.
Anyway, notice you got a double top, so a new high first entry, and so you get a second entry, a third touch of the trend line. Failed second entry.
His trend line is pretty fucking serious. He punched through it there, though. If he's drawing on a Wix, you touched it. His moving average makes sense, but I think maybe he sees it, but because he seems to get the idea that you want to put a sell limit here, irregardless. And once they come into here, can't you see the buyers come in there and they're like, oh yeah. Then it goes doji and people are like, holy shit, looks like we're going up here. And then here's the crush into that. We assume this is the head and we are wrong by this much. We assume this is the head. We are right by that much. But here you could be running stops. This is easier to trade in a way because I'm always thinking the 5 decimal broker really makes you able to put in psychotically half a pip apart. I mean, quarter pip. It's maddening. It's disturbing. It looks very noisy.
Entry long, that's a good place right off that short.
You're never going to get dozies lining like that up on a Forex chart.
term trend line. I like going short there. Another nice move down. And then, of course, it bounces and it comes back. And I would have drawn my.
I see the bounce. And that's what I call it too, is a bounce. When it falls down here, it does bounce. Well, it does that kind of first thing, and then it kind of, it's a slow retracement. But this bounce here, there's a bounce. So I like the bounce trade and the bounce off the ceiling trade. Here, your sell limits. So you have sell limits here and here. And this one doesn't fill, but these fill amazingly. And it's really up into that perfect window. But these windows come and go, right? Because once we fill this, that's history. And now we filled all the way back to here. We could have bought all these wicks. Currently long, going to cash out here, cash out there, go short there, go short there. And start the whole cycle over again.
Trend line right here now. And then you try to go higher once. And you get a lower high. There's a second entry short right there. Notice the new low, first entry, and then second entry, and it's.
You gotta be able to see the trailing sell stops here for new sellers and for protection from the bears. So they hunt their stops, and you sell and limits into their stops. Then you got to buy back here because they're gonna crush it up here. So you really know where you're supposed to get out and go, back and forth. A lot of trading on this chart. I guess you need an alarm that goes off every time 2000, right when you're getting to about, I think, just below 2000, 1190. That's 1200. Yeah, like 1999. No, give a 20 pip warning.
All that's confirming that
20 tick warning.
That trend line. And then you actually get a failed second entry long right here. This is a new high. It's higher than this one and this.
Oh boy, wait a second. I didn't catch that. So this is where I think he went totally. This is where he doesn't get it.
The lower high, there's a second entry short right there. Notice the new low, first entry, and then second entry. And it's all that's confirming that trend line. And then you actually get a failed second entry long right here. This is a new high. It's higher than this one and this one. So you're moving down. First entry, second entry, it fails. I like going short there too.
Oh, I thought he meant this is new highs, so therefore an uptrend.
Another nice move down. You got plenty of room to get out before this low. So then it bounces. This is the overnight lows right here at these lows here. So this one is really tempting, but it's risky. It's one of those you might mark green.
Oh, I love risk.
There's a high or low right here, but you don't really
it's risky.
Get enough room to get out before the EMA.
Like a crazy girl.
And this trend line's still in place. So I don't think you want to go long yet. You want to see more of a reversal.
She's a handful, they say.
Pattern. Better reversal pattern. You want to see things get up here. And then notice what happens. You move up here.
Androgynous Pat.
You try to go short once.
I try to go short. Now look at you. What'd I tell you about going short, son? Now look at you.
You try to go short twice, and so you get a double test when it breaks above here. You really have a double test here, but you don't want to go long right into that high. Plus, notice what happens. You pull back first entry, and then you pull back, and you get...
That is a heartbreaker. This is where I think he's getting mucked up. He doesn't realize you really have to be the guy that's accumulating every time it's down. And maybe you are taking something off there. It looks to me like you got to trade this pretty heavy to make money on these little moves.
That little tick lower as well. That's a second entry long. I like going long there. It confirms that trend line. You can call that a double test. A nice bullish bar, and off it goes. I
would say it's above the floor here. So looking at this low, you cut into it, you come back to it, you come back to it, Can't take this out. No, but the buyers do come in at this top, but I think the window is so tight there. It's kind of backfilling so many bars. That's kind of the deal there. It's the old, finally it backfills, right? Like here, finally we take out that, and they scalp off that. They do. Big boys.
Would have been another good entry. And so you made a new
It's good entry, son.
low here as well. And so you're moving up first entry, second entry. You get
Moving up to the east side.
another bounce on a failed second entry short with a nice bullish bar right off the trend line and EMA. And you got to
EMA. Even got an EMA confirming that, you know.
figure then we're going to fill that
I
gap.
figure.
That's the overnight gap between here and here.
That's right, son. Now this is my point exactly. One man's vax, another man's gap. Or it's that thing between the girl's thighs.
Notice we opened here, and so that's where we're probably headed near term. That would have been a good target. I talked about that early.
I'll tell you, good target for everybody there. Sellers are coming in, buyers are cashing out. Look how they just nicked that wick. So this stands alone because of that behind it, right? Because of that behind it. Actually, get out your MT4 and just put a moving average on highs and lows. You'd be surprised what you'll see. You'll just notice how there's this big fucking hole above and below it. It's just completely like ridiculous. This candlestick stuff's got to stop. I cannot take it anymore.
This morning in the
Enough with the candlesticks, people.
around 9:30 or so on the mid-morning
We're not Japanese people. Do we look Japanese?
mid-morning chart that I post, I talked about we're probably going to fill that, and that'd be a good target. And of course, it goes straight to it before we get a break. And you actually get a second entry long right here, but when those made those two matching highs, you could have entered here. I think it's a little bit risky.
When every time he says risky, I think it's the best trade I ever saw. Yeah, I do. Right here, I'm getting in. Right here, I'm getting in. Don't much matter. I could buy this one, this one. We'd actually have to. I'd also have bought here because it's down big. Here I bought a little bit, market here a little bit. Then no buys for me. I just ride this up. Definitely going to sell to that new high. I'm totally selling into that.
But you could have entered right there.
You sure could have. And then you got two hammers, a bullish and bearish hammer. Kind of the inversion in golf where, here's the total in golf here. So we also have a inside bar kind of body-wise. Also the inside bar trade. So if you look at this, here's an inside bar. Right. Well, let's see another one here. Let's see if I can find another inside bar. That's hard to on here because strict rules would say this is kind of an inside bar, but it's a double top. That's another problem with the ES market is you can't really get that high res definition of a candle. It's hard to get an inside bar where you can get away with it just by a few tenths of a pip if you're going to go with that strict rule system.
This was a line I was playing with earlier, and I forgot to erase it.
Stop playing with my lines.
I just forget that one. But you pull back, first entry, pull back, and it was a second entry long. But I would wait and counting off the high, I'd look for a second entry. It didn't break lower here, but you're pulling back. That's basically a higher low right there. And so I like going another bullish bar.
That's your first small bar other than this one, which you would have got trapped on. So a non-directional trader. Buy stop, sell stop. But the structured trader has limits in here. Buy stop, sell stop, only filled in the buys. Then there's no, to me, you're either selling you're selling a little bit every time it goes up, Sell at the market, sell at the market, sell at the market. This one eventually becomes a winner. This one takes a little longer. So that's one trade plan. Then we have our buy stop trade plan. Small bars get buy stops. Small bars get sell stops. If we are going to trade at the market, trade on stops, and of course then there's a limit situation. They could be shallow limits because if we're going to buy this on limits, we just got filled here, trailing buy limits, right? Where are people getting stop hunted? We bought this on limits, we bought that. Our ratios are, 1 to make 4. 1 to make 4. 1 to make 4. So you buy at the market, you buy at the market, you buy at the market, you buy at a stop, you buy at a limit. You're biased long. You don't have to be here. You can have a buy stop and a sell stop. And at some point that is going to make money, right? You buy stop, sell stop, you buy at the market, but you really are cutting into the seller's head, right? The shoulder, the head. Maybe the shoulder, but we're selling the head. We have to sell tops and buy bottoms. It's just how it is.
Bar, so I like waiting till there. You could, like I said, you could argue for that one. And you figure we're going to try to make a retest of the high. We may go all the way up here to test the overnight highs, and that's exactly where we go. And then you're moving down first entry, and then you get...
This guy should just trust himself. He should look at risk as an opportunity to get in these fucking markets. He's just too conservative for me. I just can't take it.
A little second entry long right there.
He's like, he'll come up with a kill Stokes, let him babysit my kids I don't have.
I don't think you want to risk that 1, 2, 3, 4, 5
I told you don't let the baby ride on the hood of the car.
Bars.
That's risky.
That's a perfect doji. That's congestion.
Congestion? Well, I hate that. Is that like noise?
You want to stay out of it. That's basically a little trading range. And then, of course, you drop down and
stay out of there, son. That's one of them fucking, it's not even a hot spot.
Oh, and so you might consider that, but you got this trend working lower.
Oof.
And so I wouldn't fool with that.
Don't fool with that. Just step away from that. That's the biggest move. The reason I'd stay away from this is because look how big the move is. It's just so confusing. Well, it's kind of like, iffy and then kaboosh. So we could either have buy limits here. Maybe we do get trapped in all this drama. But if we have shallow limits, we can run. And don't forget, we just keep nailing the old sell button. Every time it's up, we got to sell the market, sell the market, sell the market. Doesn't always work, but when it does, it's fucking great. Like, say if we sell the market with a stop here, sell the market with a stop here, sell the market with a stop here, and this order is designed to cash out, cash out, cash out. Right? If we faithfully sold every time it went up, because I'm a bear, maybe we're getting better prices, holding on. Plus, I got maybe sell limits here, and it's all dicey, and it's all kind of weird, and people are like, what the fuck? Yeah, we could draw a trend line here, and we could claim a break, or we could claim it broke here, this bottom became a top, this is the shoulder. We're just going to plain old assume this is the shoulder. Start running sell stops. Start selling at the market, and start getting filled on your sell limits up in here, and you're totally into a short scenario. Granted, if this is a small bar, and we have a buy stop here, and we're running the non-directional, okay, we're paying for getting into this, kind of winning into it. If we put sell stops in here, we're going to kind of maybe be a wash, but we will reduce that risk. We are reducing the risk by getting into a narrow range. So let's say we put, of course, this also goes against the other trade plan is we put sell stops here for the positions that we sold here. But maybe we do have sell stops that are tight and they're just based on math instead of the structure. So we have a big stop up here and a stop there. We do have tight stops, and maybe we do get stopped out on our sells. that we're selling at the market as this marches up, right? So if I sell here and my stops here, and I sell here and my stops here, and I sell here, I'm only able to hold on to this last one. If I see it moved up really big, I'm going to put in a wider stop and trade the same size because I'm looking for the market to go down a big. Just like if I bought this and this, I buy with a wider stop here, which means I risk more in this trade, but this is the best trade. I don't buy too much. Here I buy a lot, I buy a lot, I buy a lot. On big down bars, I buy a lot. Here because I know I have buy limits here, and maybe I do buy this. And I buy this, and I buy that, and I get stopped out. But then maybe I make some money on this, but I buy. Okay. But I already know that is anything below here, I must have put limits in there because, or I've got a really big account and I'm like, oh yeah, let's keep buying into this. Is too much fun. I'm not going to buy this bar and I'm not going to buy this bar because this is up. So I'm going to buy 3, 4, 5, 6. It looks like a lot. And it is if I put in a huge rack of sleeper cell in here. And I'm also martingaling in on these last 3 bars. I'm really getting in pretty heavy, and it's kind of dying down, and I can run tighter stops on a couple tickets.
Tight. It's tempting to go.
Okay, so then it goes ripping back up. So here's the thing is that it is very psychologically difficult to buy here with a wide stop and actually get stopped out here because you thought that was wide, but that's okay. You know you're getting filled on limits, and you know you're buying. And here you're getting in the real big tickets and all the way down. I mean, in here you're cashing out. If you're selling in an up bar, you're cashing out. And maybe you go totally out here. And then you come in with shallow limits. And now you're assuming that this is a head, you're looking to buy the shoulder now. And like Albert Brooks, you're thinking ahead. What's next?
Short right here because it's right back at the trend line. Notice how it gaps over it right there, telling you it's probably in the right place. Fairly bearish bar, but it's just a first entry short counting off the lows. So I think you got to wait. Unfortunately, you miss a nice little move here. You get a lower high here, but we've already had 1 leg correction, 2 legs down. And even though it would have worked.
So see how he missed the structure there? He missed the structure because he's talking about higher highs and higher lows like this crap people talk about. He missed the fact that this is coming back and it's actually just going a little bit above that, but it's about this. Right? Did I miss that? Let's see. Maybe I got the wrong spot on the chart here, right?
2 legs down, and even though it would have worked, we're overdue.
Okay, no, it's right there. So this is the first time that we're able to make it back to this floor, right? Because we didn't make it here. There's still a little bit to fill, and that's the cause for the effect. And then here is another reason why it retraced was it filled up all these tickets to here. It gave you fuel for that move. It creates an order imbalance, and it goes the other way. I mean, Black Swan's not going forever.
For a little bounce, and you see what happens. It pushes a little lower, and then it bounces. So wait till it comes back, and it does come back here, and and it breaks higher, and then turns and goes out the other side.
What I'm saying is sell on the way up into that. So sell at the market, sell stop, cancel, replace, and finally your first fill on your confirmation, and you had sell limits sitting up here, and maybe even here. If you're super aggressive, right? Because this first fill of the VAC is going to be pretty violent. In the larger VAC landscape, this is going to be whoosh, right? They satisfied it. So if you're going to, the way I see the Gartleys live here. They don't live here. This is not the Gartley, is not the price swing. It's the void left behind. That looks like a Gartley to me. So you see people do ciphers and batwings and stuff. I see it like this. Like, this is the hole that we're trying to fill. That wasn't too good. It's like this. Right, this is the hole. And this is the hole it leaves behind on the top side. So it's always caving in.
Right there. And now
caving out, caving in.
Now you got a failed second entry long. Notice that swing high, it's higher than that one. So you got a new count first entry. And then
so he does a whole new count. So he's like, this is also kind of Elliott wave-ish. I'm going to count the waves. When in essence, it's just about the market healing itself from all the trauma of creating all these disparities.
And second entry, and as soon as it breaks lower right here, it's a failed second entry long. Technically,
they don't get all technical on us, son. Look, he's got this really steep trend line. I do that when I want to sail. I do that because I want to see that violated immediately, so I draw it very steep.
I don't know if that's a failure, but it's close enough, and it is off a key entry point. It's the same thing. There's a lower high right here.
So here's where everybody kind of cashes out. Because when it makes it back to here, a lot of people are like, you know what? That was fucking amazing. Because this is their break-even ticket. They bought that, and they get to cash out. If they had a wide enough stop on that one ticket, they're like, oh, I'm out. Perfect. Every trade's a winner. I got a wide stop. I put limits in. I bought Martingale. I loaded the fucking wagon below this. Right? You have to believe this is going to happen. Bought here, all the way down. Down here, you just bought everything you get your hands on. And maybe you held the whole fucking thing to here, which means that you made so much money down here because you rode, when you got to here, the count was already up 100%. I mean, you doubled your money. That's if you risk, the risk is the problem is how much is your dollar risk, right? So I'm talking about 100% of what? 1,000? 100,000? Maybe not. Maybe you don't want to risk $3,000, right? The account's 50 grand. You just lost $3,000 today. Some people be like, I don't know, I made $6,000 yesterday. I don't know where people are living, and nobody talks about size, so I don't really know what people are talking about when they talk about winning and losing and risking. You know, without a dollar amount, one guy's Porsche is another guy's, just $5,000 car compared to a $500,000 car. I guess there's a whole spectrum there, right?
I would have liked it better if it broke higher, but that's another possibility that you could mark green.
Green.
Again.
Man, these are just, this is no way to trade. I'm just telling you, I could not, I mean, I get what this guy's aiming at. Looking for a setup after confirmation, and blah, blah, blah. But it's just never going to work because you got to have, in my opinion, a stop, a limit, and a market. These are the three tools to get in these trades. And you can get out at the market. You can exit at the market. Or you can exit on a stop where you're running a trailing stop. Or a limit, where you're going to cash out. When you have a take profit that you've dragged in, it's really a limit. Because if you run a trailing stop, you're saying you're protecting yourself against a huge pullback, but you're going to get stopped out because it's going to pull back to some degree. Really being conservative with the trailing stop. Now, a trailing limit means you're going to keep moving your target up into the hole of your limits to come back the other way. Or you could just go flat because maybe you don't want to be mentally concerned about whether your account is winning or losing money, whether it's a small or a large amount. I mean, it's mentally taxing to think about, well, I'm risking money and gosh, it takes a lot of time to make money like that if you were to build a car and sell it, or you were to build a house by hand and sell it. It's a lot of hours of work that you just basically lost in about moments. It may take you a whole week to lose that drinking and smashing your car. You may be able to lose that kind of money like in 30 seconds, where it took you all day to like get arrested, hit a car, whatever your lifestyle is. And you're like, this is disconcerting. I don't like this number. I'm like really getting killed here.
I would have liked to have seen it break higher, but it didn't. So
I use lime.
consider it.
I go for
and
lime.
Of course, we dropped down, and I'd be looking at this.
Well, now look at this fucking spectacular retrace. Now for the big heavy hitters with giant testicular fortitude, if they bought this window below here and they wrote out this thing, you got to hope they're running buy limits here for that absolute insane stop hunt. We'll just call it stop hunt, or just how about a spike? And then, wow, breakout, come back into fair value again, and then here we go, people. We're going after this, and everybody's cashing out there. I'm going flat there. Maybe throw some limits in up here and some buy limits below.
Ways I'd measure this leg first and look for a possible measured leg, and you can see we came real close right there. But I'd also
No, I appreciate that people are going to do that. You're also ignoring structure, and you're really doing these greedy price pulse things.
also measure
it
this.
does work, because I would do the same greedy price pulse here. I go like this. We're probably going to see this after we see this. But it can make you blind to the fact that there's this window, which trumps all of that trend line and all that moving average and all that pin bar stuff.
Whole thing right here.
Oh boy.
You can see we basically had a perfect measured move down.
I know, man, but we didn't take it. Okay, so we need trades we can take.
So that's 2 legs down. Now you probably get a reversal. Again,
Wow, look at that pullback to the. You see that pullback?
this is where the lows were, and notice how we bounced there again. And so you get a little failed drop lower, and that's a relatively bullish bar that actually breaks lower and turns and goes up, and you're a long way away from the EMA, and you know it's probably going to be a failed break lower. Generally, you're better off to wait on the higher low, but sometimes you'll catch major important lows when you do this, and this was one of them. And of course, it runs up, and you get a first entry, and then you get you actually get a failed second entry short, right?
Too complicated. Way too complicated. Let's just think about stuff like this. What do we know about this? What do we know about that? Buyers are coming back in here. Put a scalp. You know, the more I look at this ES, it just looks like commodities. It looks so easy. So smooth. There's buyers here. Gee, that's crazy. They cashed out there. That's crazy. Buyers here. Oof, they didn't get the cash out. Somebody bought that at the market. Big down. I would have bought here and here. This one's a winner. This one's totally not. But if I'm running the sell plan, this is why you want to hedge. You bought a lot here. You sold a little here. And you bought a lot here. Like, you're only going to trade on big bars at the market with a wide stop. Small bars, buy stop, start stacking up. Even the non-directional traders make some money. No small bars here. Well, this one here. It's your only small bar. You're able to kind of, but you're keen to this window here. Didn't quite get filled on your sell limit there. No fill on your sell limit here, and maybe we're done tanking. We could still take this out. So I'm an eager buyer, willing buyer below here now.
Right there, and a nice bullish bar. It is a little bit of congestion. It drops out of
congestion. Well, I'm getting over a cold. That's why I'm a little congested myself.
Too, another reason. So I like going long right there.
I like going long too, buddy. I'm with you.
does pull back,
Pull back.
but it gets back inside this little
Inside. Almost an inside bar. Kind of a latent inside bar. See, this bar's inside of that big drama bar.
There's actually a little congestion range area right there. You can see it.
Congestion.
And we drop lower, but you got to go long right into that. Although we did break out, so it's a possibility. If you hadn't got another
Let me guess, it's risky. Come on, say it.
equal high right here inside bar, I'd say maybe.
Maybe, but it's, what did you say?
And it does tend to confirm that trend line. Notice you start right here, your first touch, and then your second touch. I'm just not crazy about that resistance across
Is it risky or not?
there. It does take off, and especially being that close to 2 o'clock, and it gets you in the 2 o'clock hour. So, and this is a new swing low, so first entry, second entry, it's a trap too. So that's another reason. You could at least argue for that to be green, but I'd probably skip it.
But it's not too risky.
So most of your trading was early today again, and then it kind of got a little slow this afternoon. So we kind of had the opposite lately, where it's been slow in the morning and really nice trades in the afternoon. And there was actually some good movement after 2 o'clock, but you're better off just stay out of that.
No shit. I'm just going to take a nap. Come to think of it, this trading looks too difficult.
Usually it's just trouble trying to
Trouble is as trouble does. I like the risky trades. Go back to the risky trades.
trade that. You get stuck in a trade and
Oh, look, it's counting off the pips. The ticks. We got to get to 2,000. Waiting.
you end up with a loss
I
trying
didn't realize it was counting out.
to do that in the afternoon. But anyway,
Oh, wait, no. It's the price. Sorry.
good trading day, especially early, which is what I like. I like to trade early and be done early. And you had a good opportunity for that today. And I tend to like these range days. The best trades are usually going to be your shorts off the highs and your longs off the lows.
I like that. Now, you could just said that at the beginning. I like that, too. I like to buy low, sell high.
Unfortunately, you didn't get a lot of that today. You really
Huh? Man, look at that thing. It's a fucking train wreck.
just had to kind of play the trends within. And
What? Wait a second. Didn't he just say? You have to play the trends within.
trades are usually going to be your shorts off the highs and your longs off the lows.
Yes, I agree.
Unfortunately, you didn't get a lot of that today. You really
You didn't get a lot of that today?
just had to kind of play the trends.
Are we looking at the same chart? You have to play the trend. See, this is where I don't get it. Please explain this to me.
And I tend to like these range days.
Wait, he tends to like the range days.
The best trades are usually going to be your shorts off the highs
Yes.
and your longs off the lows.
Bingo. You nailed it. Now he's going to say that that's not what this chart is.
Unfortunately, you didn't get a lot of that today.
Unfortunately, what happened to this guy's brain? I'm just going to say it. I'm thinking it. I'm just going to say it. Is his accent affecting his technical analysis?
You really just had to kind of play the trends within. And you
The
could see
Trend Within. That's the name of my fourth book.
these are fairly straightforward trends.
Fairly straightforward. Dude, really? It's a train wreck.
Nothing too out of the ordinary here. So, relatively straightforward.
Relatively straightforward. Okay.
Notice this one working up, and you finally get a break, new high, and then it's turning down.
But yeah, dude, you have to get in. If it's a trend trade, did you have to get in here? I guess he did. This is arrow. Here, 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 here. You got in here. But there must be a guy that got in here. He got in here. Got in here. He range traded it high to low. There must be that guy.
You get a break. I don't have this one drawn. Just showing them to
You
you.
don't have a drone. Is that like draw in?
Yeah, you can see that one. You
I drew it. It's been drawn.
get a break here, and notice you get a second entry short, makes a new low, and now we're headed higher.
Higher. Headed higher.
Same thing here. We're working here. You
Same thing. Sam Ting, that's the guy that works in my laundry.
get a break, and then you got your break. What was odd about this one? You got your break really early, and then you still got two big heavy legs down, and it reversed, and then now you're working up. Again, you break, your new high, it's working down. Same thing here, you're coming down. You didn't really get a break and a reversal here. I do believe.
Is this guy overthinking it? What's the trade now, Elmer?
Just can't grab the right one. I believe that this was
Well, that's not going to work for me then.
a little tighter, and you got an overshoot twice here.
Oh, I hate overshoot. I hate it. It just don't line up with my technical analysis.
And then it reversed. But on range days, sometimes you don't get a break and a reversal. But most all your trends today, and look, notice this one working up, you get a close
Is it a range or is it a trend, son? Make up your mind.
outside, new high. Working down, you get a close outside,
It's both. Can't you see it's a trend into the range?
new low.
What's the matter with you? What are you making fun of these people for?
Outside, close outside, new high. Running down, close outside, new low. Working up.
Working up, working
Same thing here.
down.
You're working up, close outside, and it runs up to a new high.
Oh, the old outside close. I heard about that from Empowered Trading.
Actually, I think it makes a double top there. It doesn't quite make a new high, but that's
Oh,
close
that is steep. Look at that fucking trend line.
enough.
That's fast money there, son's what that is. See. Now let's not forget the velocity of making money here. If you sell here, they go down so fast, son. You made so much fucking money so fast. Look at that. And you gave it all back. Told you don't let your profits run. They came back and stopped you out. You're a fucking idiot, son. Stop trading like that.
So it was fairly straightforward. So other than the fact that it's a
Fairly straightforward. I like that. When do I sign up?
range, I tend to like these days, especially when you've got a consistent highs and consistent lows. And
Wait a second. No, you just said that there was no consistent highs and lows, and you just had to range trade. I mean, just trend trade it. Right? I'm all mixed up now.
you just wait for a setup at the highs to go short or a setup at the lows to go
Oh,
long.
I agree with that.
And I tend to like those trades. So anyway, I'm going to wrap it up.
Okay.
We'll be back again to do it tomorrow and wrap up our week, but I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.
Oh, hand on face. I just palmed my face. Let me see what people are saying. Now, this has got about 32 views. Okay, he's not killing it. It's just published today. I don't even know what the market did. I don't trade that. So probably no comments. Learning to trade Pat. Pat's trade. There you go. Price action trading. Learn how to. This has got more views. Let me see what people are saying in the commentary here. Not too exciting a comments. I guess he hurt his eyeball. So hope your eye is doing better. So this guy surmises, I think we might be ranging because we're coming up on the all-time high for the S&P. It's trying to dig its way out of that mini crash we had this winter. So look at the suggestions from YouTube. How to understand any price action chart. Free online seminar. How to create infinite possible returns with minimal risk. The Fed has your back. Oh, thank God. Real truth day trading. You love it. Day trading with legend Steven something. Look at this guy with the screens. Boy, there's a lot of stuff to go through, isn't there? Look at this chick, another psycho babe trading. Trade the Super Bowl. I never thought of that. Learn how to day trade using price action. Oh boy, oh boy. Pat. Pat's trading that. Look at these Chinamen are all over it. More learning to trade with Pat. Pat's got too many rules for me. Look at big banks, no nonsense. Almost 500,000 views, big banks, because they're after my stops. Fucking big banks, them hotspots. Look at this, day trading for beginners. Look at this, fucking blow your brains out with screens. Ugh. There's so much to dig through here. Price action trading secrets. You want to know a secret, don't you? These tricks are like steroids for your trading. Will I get small balls? I'm not sure. I'll lose my balls if I trade with steroids. A well-managed bubble. What is this? The guy that got arrested for molesting people. Kevin Spacey there. Trades Kevin Spacey in a well-managed bubble. Learn how to trade with price action. Another learn how to trade with price action. Oh, this fuck nut. Look at this. 1.4 million. Learn how retail brokers are coming after your account. Coming after your stops. Look at this guy. He just inherited $1 million. That's why he's trading. He's an oil sheik. 2020 cometh. Learn how to trade with price action. More price action. This is the guy I got to get to. The Chapman way. What a putz. He talked about stop punch. Market foundations. Market crash. Maverick trading. I think this is the guy that's a real plunger, real risk taker. Look at this, more secrets. Most trading gurus will never tell you. Keep all them secrets to themselves. See? You can't make no money from it. They're way ahead of you on that chart, son. You don't know shit. More secrets. Look at the 1 million views. People love secrets. Here's Peter Schiff, the fundamentalist. Learn how to trade. Okay, so there you go. Pause the video if you need more time to digest the disclaimer instructions. Oh, I sure will. Last thing I want to do is risk any money. Anyways, that's my view of the trading with Pat.